Welcome and thanks for joining us at EMII.com. I'm Kathleen Reddington with your hedge fund headlines. Today is Tuesday, July 29th, 2008. According to Wealth Bulletin, more U.S. hedge funds are looking to expand into London to support their European client bases. London remains the hedge fund center of Europe, despite predictions that the UK's non-domiciled tax regime would lead to hedge funds migrating to other European destinations. The city now handles about 75% of Europe's $300 billion in hedge fund assets. Institutional credit partners Capital and Silver Creek have already made the move. And staying with hedge fund news, Bloomberg News is reporting that Mitsubishi Asset Brains company plans to launch a hedge fund. They are aiming to invest in managers that can make money in falling markets. MAB is aiming to start advising a fund in the next 2 to 3 years with the aim of raising several tens of billions of yen. Mitsubishi Asset Brains aims to tap a growing demand for funds of hedge funds following the credit crunch stemming from U.S. subprime loan problems, which prompted investors to seek diversified investments to secure steady returns. According to their executive director, Mitsubishi Asset Brains has hired a hedge fund manager who will start in August. And in more hedge fund news, according to the Sydney Morning Herald, New York hedge fund Harbinger Capital Partners believe that the commodities prices could be nearing their peak may spark major changes in the ownership structure of some of Australia's largest mining companies. Harbinger has emerged as an opponent of U.S. iron ore miner Cleveland-Cliffs. Cleveland-Cliffs proposed $10 billion acquisition of coal miner Alpha Natural Resources. Harbinger has substantial stakes in Australian miners. Harbinger owns 18.4% of Cliffs. Cliffs has an 85% stake in West Australian iron ore miner Portman Mining. Cliffs wants to merge with Alpha to form a more diversified supplier to the steel industry, but Harbinger wants Cliffs to consider selling itself, presumably to a steelmaker or rival iron ore company. And in other hedge fund news, Chosun Ilbo Daily is reporting that South Korea plans to launch a review. The review will determine if it will approve the sale of 51% stake in Korea Exchange Bank to HSBC Holdings by the current owner, U.S. private equity firm Lone Star. The deal is valued at $6.3 billion. Officials plan to commence the process before July 31st deadline for HSBC's offer. HSBC announced plans to purchase the stake in South Korea's number 6 bank in September of 2007. The deal has been delayed over inquiries as to the nature of Lone Star's activities and purchase. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com for more details on these stories and much more. Click onto our hedge fund channel online, read the full stories and the latest developments.